Thanks. My name is Kris. I'm the CEO of Challenger Exploration, South American-focused company with assets in Argentina and Ecuador. What you see there on the cover shot is our lead project in Argentina. Sits in San Juan, which is by far and away the best mining jurisdiction in Argentina. 2 million ounces open in all directions, not impacted by the glacial law, and basically sits on granted mining leases. So it will be one of the next projects to get into development in Argentina. Challenger, quick snapshot. So as I said, lead asset, Hualilan Gold Project in Argentina, 2.1 million ounces, open everywhere. That resource has a high-grade component of 1.1 million ounces at better than 5. And we've got a resource upgrade due in about 3 weeks, where we're looking for a significant uplift. In Ecuador, we're southern Ecuador, we basically sit along strike from Lumina Gold's Cangrejos project, which is 17 million ounces. And you can see from our drill results there, we actually think we've got the other half of that system. EV about 110 million US, which is trading at a significant discount to our peers. Corporate snapshot. So cash of 15.4 million Aussie, which basically takes us through several value accretive milestones. Major shareholders, BlackRock Group out of the UK have 13%. Queen's Road Capital, which is a long-only Canadian listed gold fund with a reputation for doing very clever deals, came in recently, put in 15 million. And I suppose the other differentiating factor for us is management hold 20% of the company. I put in the first $1.5 million to get the project listing ready, so we've got skin in the game. We're aligned with shareholders. And I suppose unlike all gold companies, or most, share price is trading at 50% of what it was 8 months ago, but therein lies the opportunity. In terms of milestones that will drive value, so as I said, you've got a resource upgrade on our lead project due in about 3 weeks. We've started a PEA, we'll drop that updated resource into the PEA, and that should be finished in the middle of the year. And I think for us, the market sees our project as a bit complex, and that PEA hopefully is a moment where the market goes, we didn't see that coming. And then in Ecuador, very sensible approach. We've got a maiden resource due in Ecuador in May, which again, I think will surprise the market and let the market understand that we've got the other half of that 17 million ounce system. I'll talk about Hualilan, just the geology first. What I've done is I've overlaid the geology onto the topography. The green is high-grade mineralisation, the yellow is low-grade. It's a sort of complex skarn system with a bit of intrusion-hosted mineralisation. What you have is that line of hills there is a big thrust fault that controls the mineralisation. You've got 2 east-west faults, the Sanchez and Magnata fault. Mineralisations come up those faults. You've dropped out high-grade mineralisation in the faults. You see the bedding units in the hills dipping to the right. Where the fluid has come up the faults and intersected limestones, it's replaced the limestone beds with lenses of high-grade massive sulfides as well. They call those mantos, and that all wraps around a large low-grade system, which we think was actually the source of the mineralisation. So it ends life as one big long pit, and as you can see, open in all directions. This is what it looks like now after about 770 holes. We've had 8 rigs on site. Up until around about 6 months ago, we had 8 rigs going for over 1.5 years. And the reason we do that is you're a listed company, you've got overheads, and the best way to spend shareholders' money is do something fast rather than sit back and basically just burn overheads. And we'll do the same thing with getting into production. Our aim is to get into production as soon as we possibly can. The resource, I've got a table there on the left. Probably the key to the resource is at the current gold price, it's a big open pit, 2 million ounces at almost 2 grams. If the gold price is $1,400 or $1,500, we've got a nice high-grade underground gold mine. There's the best part of 1.2 million ounces at better than 5. So we've got flexibility. We've also got high-grade ore at surface, which allows us to scale up. So it will be a smaller startup, then expanded out of cash flow. And then on the right, I've got some of the recent drill results that aren't in the resource. So again, look for a significant uplift in this resource. I'm just showing you a long section there of the resource on top, just showing you the grades and what you can see at surface. We've got high grades there at surface, which is important from a starter operation. And the balance of this resource when it comes out, it's been designed to be predominantly indicated, which will allow us to roll straight through a pre-feas and then get into production. I'll just show you a couple of sections that show where the growth comes from. So this section, I've got the existing resource blocks in green and blue. Sitting about 50 metres under that, we've got a high-grade intersection of 28 metres at 5 grams. That will push the pit down, mineralisation open at depth in that area. We look sort of in the centre. This is one of the east-west faults. We've got a hole there that got 8.4 metres at 5.5, which has pushed the main Magnata fault mineralisation down about 150 metres. And a couple of weeks ago, we announced a hole, which is the second structure there, 15.2 metres at 4.7, which is a repeat of this high-grade fault mineralisation. We go sort of to the middle of the deposit, and what you can see there is it's just been under-drilled. As we've now drilled out that section, you've got 3 new zones at top and mineralisation extending up dip and down dip. And then finally, this is the very north of the mineralisation. This is the northernmost section in the resource. That section's a bit old. We've now got the results of all those holes back, and they've consistently got 50 metres at between 1 gram and half a gram. So mineralisation very much open to the north. We've got some 10 and 20 gram material sitting at surface 2 kilometres away, so we're a long way from closing out the deposit. Having 2 million ounces, which is growing, is great, but you've got to be able to mine it and produce it economically. We're lucky with the deposit here. It was historically viewed as refractory. We're actually doing some cyanide testing now. It's not refractory, so there may be a change in our scoping study. But at the moment, we can produce a really clean, high-grade gold concentrate. The high-grade mineralisation is predominantly gold with some silver and zinc credits. We can produce a very nice, clean zinc concentrate as well, all sort of better than 95% payability concentrate. Our gold concentrate has virtually no arsenic in it, so we probably end up selling that concentrate to a trader and getting a premium. And on the lower grade system, again, a very simple float produces a high-grade, clean gold concentrate. And with the low grade, about 60% of that mineralisation comes out in the gravity circuit, which means we can look at things like $2.50 a tonne to crush and treat that ore, compared to sort of $7 or $8 a tonne to run it through the full flotation plant. So we've got a lot of options to look at in the scoping study. And that table at the bottom, again, just confirming we do have that high-grade starter mineralisation at surface, which is very important from a payback and an IRR point of view. We're looking at probably less than 12 months payback here. We've got the ability to get into production with a 1 million tonne per annum plant. Costs us somewhere between 100 and 150 million, and that plant will throw off 100,000 ounces a year at very low cost. Then we expand out of cash flow. So eminently doable for a company like us. Land position, we've got 600 square kilometres. We've now got the entire belt. Everything there that's orange is ours, and that's Newmont in blue. And the reason we've picked up that entire ground package is, 2.5 million ounce ore bodies simply don't occur in isolation. And to talk to that exploration potential, what I'm showing you there is a map of the magnetic data. On the right's a zoom in, so that big red blob in the centre is actually a circular intrusive complex. The model is that around the edges of that complex, the mineralising fluids have dropped out the higher grades in the sediments. And you can see there the current 2.1 million ounces wraps around 1/3 of that. To the right of page, it's all undercover. We haven't really had a chance to look at it. We've been so busy chasing 9 rigs and getting a resource. But you've got basically 2/3 of that complex totally unexplored. You step back on the left, and that's sort of part of our regional position. There's not just one of these, there's another 4 or 5 of these intrusive complexes. Number 3 and number 5 outcrop, they're the same intrusive complex, same age, same composition. We've got some 10 to 15 gram material at surface there on number 3. We've got some interesting looking alteration that looks exactly like the alteration we're getting in the mineralisation down on number 5. So the way to look at this is around all of those circular intrusive complexes, you've got 25 kilometres of prospective stratigraphy. We've really only touched 2.5 kilometres of that, and we've got 2 million ounces that will get bigger. It's not going to be everywhere, but we're going to have to be pretty unlucky if somewhere along that 25 k's of prospective stratigraphy we don't find another Wallilan, which then moves us to a different level of scale. Quickly talk about Ecuador. So where we are is we sit immediately on strike from Lumina Gold's Cangrejos project. Cangrejos has 22 million ounces gold equivalent, going through an updated PEA at the moment. Based on the old PEA, it produces 500,000 ounces at $600 an ounce cash cost. We've obviously been to their core shed, they've been to our core shed. It's exactly the same mineralisation, the cores are identical. They originally were drilling a large circular gold in soil anomaly. On our ground, we've got 15 large gold in soil anomalies, some of them up to 1 kilometre. We've now drilled all 15, and on 7 of those 15, we've made gold discoveries. Each of those 7 anomalies, we've intersected more than 500 metres of ore-grade mineralisation. All of those anomalies have a higher grade core in there. So we think we're well on the way to having the other half of the Cangrejos belt. And 15 million ounces on our side makes it a tier 1 asset. Having said that, it's a porphyry, it's a large low-grade system. It's not that expensive to drill, but it still needs a drill out. And we've got a high-grade project in Argentina where we can get into production. So you'll see a very sensible approach to exploration for us. Just to show you what it looks like, the main discovery zone we're drilling out now to put out a maiden resource. It's 500 metres wide from surface, fairly consistently 0.5 gram to 0.6 of a gram. On the right there you can see this one of the second anomalies we've drilled. That anomaly there has got a high-grade zone in there, 108 metres at almost 2.5 grams, and then directly above that's an historical hole that got 150 metres at 3. So you can see there is a high-grade zone in there. That old hole was drilled by Newmont back in the 90s, and to be honest, I can't work out why Newmont walked away from it. You look at that hole we've just drilled, hole 23, it's got 200 or 300 metres at over 0.5 gram from surface, so it looks like these two anomalies are joining up. And the other key point here is if we go just along strike on that main anomaly, we've got some holes that include 50 metres at 5.3 grams gold, holes that are 115 metres at 1.5, 2 grams gold. What we've got in that main anomaly, as well as the B anomaly, is a higher grade zone. It's 250 metres long, it's about 250 metres wide. From surface, it actually outcrops as a hill. And the key here is if you've got 20 million tonnes that's double the sort of 0.6 of a gram life of mine feed, you put that in production, if you get that 15, 20 million tonnes to the plant initially, you've got the ability to scale. All of a sudden you've got a project that's got a 2-year payback, not a 5-year payback. Your IRR's not 12%, it's mid-teens, and you can fund that project. And that's what we think this first resource will show for us when we get it out to the market in May. Just sort of going a little bit further north, these are 2 of the larger anomalies we haven't drilled. About 1.5 years ago, we put out 2 exploration targets on those anomalies. Both were 5 to 6 million ounces at 0.5 to 0.6 grams gold. When you look at the drilling we've done, that certainly validates that target. In section, basically these are both 500 metre wide anomalies. What I'm showing you here is effectively a leapfrog section. We're starting to put the sort of grade shells and wireframes around for resource, but what you can see there, and I'm showing you on the left, is this main A anomaly. You've got this consistent zone which is purple and red of better than a gram material from surface, which hangs together. And the section on the B anomaly there, it's off section, but again, you've got another sort of 200 to 300 metre wide zone there that does have a central high grade core that's 50 metres wide that goes 1.5 grams to 2.5 grams. Valuation and milestones. So look, where are we now? Based on the 2.1 million ounce resource in Argentina, we're actually trading at about $70 Aussie or 50 US an ounce. You look at the Australian developers trade at about $110 an ounce. We see our peer group as companies that are not yet in production. They've got a 2 million ounce resource or greater in one deposit with some grade. It's not a large peer group. Those companies are scarce as hen's teeth because they either get into production or they get taken out. You know, that peer group at the moment trades at 160 an ounce, which is double what we're trading. And as we get through a PEA, a pre-fees, we'll get up and close that gap, because at the moment we haven't got the financial metrics out. So you take us here, you've got $70 an ounce, you've got a resource upgrade coming in Argentina, you've got financial metrics coming to the market where hopefully we re-rate from 70 to 100 to $150 an ounce, and then you've got the wild card of a resource coming in Ecuador in May, where right now the market gives us no value. Thank you very much for your time, and happy to take some questions.